They have to improve their efficiency as they compete with new players, such as the recently licensed universal banks, as well as the payment banks and the small finance banks that we hope to license shortly. Now, at the same time as they have challenges, we should not make their task harder by creating impediments in the process of turning around or recovering stressed assets. And here the RBI, the government, as well as the courts have considerable work to do. We also have to work on spreading financial services to the excluded, because once they learn how to manage finances and save, they can be relied on to borrow responsibly and spend responsibly. New institutions and new products to seek out financial savings in every corner of the country will also help halt the erosion in household saving rates and lead to a more stable financing of our investment needs. Finally, I would make a plea that given the income tax benefits for an individual to save have been largely fixed in nominal terms to the recent budget, the real value of these benefits have eroded. So as we acquire fiscal space, we have to find ways to encourage savings once again, and I think one of the least inefficient ways of tax spending is to offer some benefits to saving, and one might think of increasing the financial benefits to saving through the tax mechanism. The third, I think, is I've said that domestic demand is very difficult to control. It tends to go overboard. So if we are going to be reliant on domestic demand, we have to improve the institutions that help us control it. Countries typically tend to overstimulate, have large fiscal deficits, large current account deficits, high inflation, credit booms, and then only to see growth collapse. We've seen that happen even in industrial countries like Spain and Portugal. Now, to avoid such booms and busts, we need a policy framework. A policy framework which should keep us on the straight and narrow, because we don't want to be in the position to go ask for multilateral help, especially because we are a country which doesn't belong to any power blocks. So clearly, if we want to go towards a stable framework, critically important is the fiscal framework. The Dr. Bimal Jalan Committee's report will provide a game plan for fiscal spending, and the government has also clearly indicated time and again its intent to stick to the fiscal consolidation path that it has laid out. All these things are good. Now, whether we need more institutions to ensure that deficits stay within control and the quality of budgets is high is something worth debating. A number of countries have independent budget offices or committees that opine on budgets. These offices are especially important in scoring budget estimates, including unfunded long-term liabilities that have proven so damaging to the industrial countries. So that's worth thinking whether such an institution can be helpful. On the monetary side, a central bank that focuses primarily on keeping inflation low and stable will ensure the best conditions for sustainable growth. Now, of course, we are a central bank in a developing market rather than an industrial country, and we have to recognize that emerging markets are less resilient than industrial countries. So if inflation picks up, the path of disinflation cannot be as steep as in an industrial economy, because the emerging market is more fragile, our buffers are thinner, people's safety nets and savings are lower. So this is why I've always rejected the notion that we would do a Volcker-style disinflation. India cannot sustain a Volcker-style disinflation. Instead, a Dr. Urjit Patel glide path is much more sustainable, is what we have done in trying to bring down inflation. Over the next few weeks, we'll discuss an appropriate timeline with the government in what happens after 2016 as we move to the center of the band, the inflation band of 2 to 6%. What time frame we will achieve that in, that would be discussed.